So we are doing October-November 2023, paper 12. Okay, for AS 9706. Are you with me?
Yes.
Okay, can you read the first question?
Which list is a long-term source of additional funds for a limited company?
Okay, for a limited company, long-term source of additional funds. Without reading it, can you tell me what are the long-term sources for a limited company?
Bank loan is there,
Hmm.
rights issue is there,
Hmm.
and
Bonus issue is not a source of funds, right?
no, because you're giving it from your existing funds.
Okay, fine. So debenture issue,
No, debenture issue is you have to pay back or something like that. It's not long term, it's short term.
if you pay back after a year, it's long term.
Yeah, but it
No, but
depends,
it's
na?
correct. Debenture issue is also correct. But because of bonus, this is disqualified.
Okay.
So even year bonuses, that's disqualified.
So even trade credit is not long term, so even D won't be.
Yeah, trade credit is also not long term. So the
Hmm.
correct option is option B. Leasing of premises is also long term source of additional funds. Go to the
Okay.
next one.
Which statements describe advantages of maintaining full accounting records?
Hmm.
A more complete assessment of business performance is possible,
Hmm.
so that will be correct. Bookkeeping costs are minimized. I don't think so because if you're keeping full accounting record, you'll have to hire a bookkeeper and everything, so costs will increase.
Hmm.
Then business, so the answers can't be C and D then.
Okay.
Business managers can make more informed decisions, so that's correct.
Hmm.
So it'll be A because last one is incorrect. Financial statements will be free from errors and inaccuracies because errors will still be there.
Hmm. Come on.
Then, Maya recorded a check for $475 received from Josh, a credit customer. Josh had deducted a 5% cash discount. The check has now been returned as dishonor. What is the correct entry to record the return of the check in Maria's books?
Okay. So Maria is the one who's received the check.
Yeah,
So when you received the check, you will put it where?
you put it on the debit side,
On the debit.
bank.
Now when the check is dishonored,
Hmm.
so where do you put it?
On the credit side.
On the credit side. Where?
On the
Fine.
credit side. Yeah.
Okay, fine. So what will be the entry that you will pass? First tell me that.
So you'll write for dishonor, na?
Yeah.
So you'll put bank credit
Hmm.
and Josh debit.
And what about the discount allowed? Will also that be disallowed?
Yeah.
Hmm?
Yeah, then that will be dishonor.
So discount allowed will be disallowed. So discount allowed will also go on the credit side.
Hmm.
Okay, so what will be the correct entry?
D.
Next one. What do they want from you?
Total capital expenditure.
Okay, how do you get the total capital expenditure?
So
What
price,
what
uh,
all will come in capital expenditure?
purchase price of shop will come 680. Then legal fees will
All
come,
expenses
like incurred while getting the purchase.
before using the asset for the first time, right?
Yeah.
Yeah. So legal fees,
Yeah, even legal fees will be there.
Hmm.
Then cost of installing air conditioning.
Okay. And this initial inventory,
That won't be there.
which expenditure?
Yeah, so it's 7,345,500.
What will be the
So
answer?
C.
So it is this plus this plus this. Go to the next one.
A used motor vehicle was part exchange for a new motor vehicle. The balance of the purchase cost of the new motor vehicle was settled by check. What were the entries to record the part exchange value?
So new motor vehicle came in.
So that'll be debited.
So motor vehicle will definitely be debited. So which
Hmm.
one is definitely there?
Huh.
A and B is definitely opt out.
Huh.
Correct? Now
Yeah.
this motor vehicle is coming in and the one old is getting
Out.
out. So one motor vehicle is coming in and there is a disposal.
Yeah.
Hmm?
Yeah.
So which
So it'll
end?
be D.
D. Go to the next one.
A non-current asset of a business cost $300,000 in 2021. It is depreciated using the reducing balance method at the rate of 40% per annum. A full year's depreciation is provided in the year of acquisition, but none in the year of sale. The financial year of the business ends on 31st December. In 2023, the item was sold for $150,000. Disposal costs for $15,000 were incurred. What was the profit on disposal?
Okay. So how many years is this asset depreciated?
Uh, 2 years.
2 years it is depreciated. When was it purchased?
It was purchased.
In
The new one,
2023.
yeah,
And you provide full year's depreciation in the year of purchase.
with none in the euro.
So
Same.
2021, 2022, and 2023, right?
Yeah.
You purchase it for 300,000.
Hmm.
Depreciation is 40%.
Yeah.
So first
So it
rate is
is
how much?
120,000.
40% is how much?
120,000.
So net book value is how much?
180,000.
Depreciation is under what method?
Reducing balance method. So you do
You
180,000
divide
into
cost
40%.
on net book value. Depreciation again for 40% of it.
For 72,000.
What is the net book value?
108,000.
108,000 here, and this will be again 108,000. Correct?
Yeah.
This is the net book value. Item was sold for 150,000, but the disposal cost is 15,000.
Oh.
So can you tell me the value that you get on disposal?
So 108 was the cost.
150,000 you've sold, and 15,000 is the disposal cost.
Yeah.
So it comes
Minus,
to how much?
it is 135.
So the net book value was this much. The net realizable value is this much.
Yeah. You'll minus it from 135.
So what is the profit on sales?
27,000.
So 27,000 is your profit on disposal. With me,
Yeah.
go to the seventh one.
A business received $100 cash from a credit customer in settlement of a debt. When recording it, an error of commission was made. Which statement about the debit and credit columns of the trial balance is correct?
So you receive 100 cash from a credit customer in settlement of a debt. What will be the entry that you will pass?
Wait. So $100 cash came in, right? So it'll be cash debit and credit customer credit.
Credit customer has a good name, right?
Yeah, but the name isn't given there. Trade
What
receivable.
do you write?
Trade receivable.
Okay. When recording it, error of commission is made. What is an error of commission?
Wrong amount.
Hmm?
Wrong amount it was.
Wrong name.
Acha, हाँ, wrong name. Okay.
Wrong name is error of commission. And what is error of original entry?
That is wrong amount.
So error of original entry is wrong amount.
Hmm.
So when you just put it in the wrong name, so what happens? Which statement about debit and credit column of trial balance is correct? Means something that you had to put in the debit, you put it in the debit, right?
Yeah, but you put the wrong name.
But you put the wrong name. Something you had to put in the credit, you put it in the credit, but you put the wrong name. Okay?
Hmm.
So will there be anything that would affect the debit column total or the credit column total?
No.
No. Now read the options.
The total of both columns were the same as if the error had not taken place. The
You just giving
total,
me the answer. You have the answer.
no, I'm reading both of them.
Read A.
Acha, but both won't be cancelled because the totals will not be affected, no?
Yeah. So the both the columns total will remain the same
Huh.
as the error has not taken place.
Yeah.
Why? Because what you had to write in the debit, you wrote it in the debit. What you had to write in the credit, you wrote it in the credit. So
Hmm.
it is like it only the name is different, but it will not
Okay.
affect the totals. As if the error had never taken place. So the correct answer is option C.
Hmm.
Let's go to the next one.
Company's trial balance includes a suspense account. It was found that the only errors were discounts received of $240 and discount allowed of $312, which had both been entered on the incorrect sides of the respective ledger accounts. What is the double entry required to clear the suspense account balance?
Okay. You had a discount received. Discount received as what balance?
Credit balance.
So discount received was how much?
$240.
Okay, this is the correct thing.
Hmm.
And discount allowed was how much?
$312.
Which had both been entered on the incorrect sides of the respective ledger. So I'll do wrong, reverse, correct, and rectification. Yeah?
Yeah.
So discount received was put where?
In the discount allowed
Correct
column?
sides.
Yeah, on the debit side then.
And discount allowed was put on the,
Credit side.
now you reverse it.
Discount
Discount
received.
received would be credit 240 and discount allowed would be debit 312.
Hmm.
Discount received, the correct one is credit 240 and discount allowed is debit 312.
Hmm.
The rectification entry would be how much? Would be what?
Will be discount received 480.
Credit, right?
Yeah.
Now check. Yeah, discount received credit 480. I see over here.
Uh-huh.
Discount allowed debit how much?
Debit will be 620. 4. Yours will be B.
And suspense will be credited by the balance amount 144.
Hmm.
So the correct option is option B. With
Hmm.
me,
Yeah.
benefits of preparing a BRS. Come on, what does the bank reconciliation statement? What is the benefit of preparing a BRS? It checks
So,
the accuracy of transactions on the bank statement. It's true or false?
true.
True. Read the next one.
Ensures that cash in wait,
In the till.
cash in the till.
In the till means in the cash box.
Okay. Agrees with the total of the cash column in the cash book.
BRS is what? What is bank reconciliation statement?
It basically like checks the cash book if the correct entries are done,
Tells
if
the
there are wrong entries,
reasons. It tells the reasons for
difference in
difference
balance,
in bank balance as per
cash book,
and bank balance as per bank
bank statement.
statement. Okay, this is the reason why we prepare a BRS. So this is not the reason. Come
Hmm.
on, read ahead.
Eliminates the possibility of fraud by members of staff.
How will staff deal with the bank balance as per cash book and bank balance as per bank statement?
They would so
Okay, next one.
ensures that the trial balance and financial statements contain an up-to-date figure for the cash at bank.
Yeah, trial
Yeah,
balance and financial statements. It has a correct figure for cash at bank. So this is the reason why we prepare a BRS so that we know what is our actual cash at bank.
hmm.
The correct option would be
See,
C. Read the next one. I'm giving you like 5 minutes of time
hmm.
to or 2 minutes of time to do these two things yourself, and then I'll come and discuss it with you.
Okay. Or and trade discount comes.
Read the 10th one.
A trader's cash book shows a debit balance of $12,460 at
This is a
30th
normal
April.
balance or a separate balance. This
This
is
is
a
normal
debit
balance
balance,
of cash
right?
book. Yeah. Yeah.
Okay.
Bank charges of $4,500 have not been entered in the cash book.
So if I enter the bank charges of 4,000, they want the balance in the bank statement, right?
Hmm. Yeah.
So that means the bank statement might have deducted this 4,500.
Yeah.
Okay. So this 4,500, what should I do?
So 12,460 minus 4,500.
Minus 4,500. So
Hmm.
12,460 is the debit balance that you have. You will
Yeah.
deduct the 4,500 for bank charges. So
Hmm.
if you put it like this is 12,460 and 4,500, you will remove it. Okay,
Okay.
fine. Then what ahead? They want the balance shown on the bank statement.
Yeah.
Okay, yeah, read ahead.
A check for $14,470 received from a credit customer and a check for $1,740 paid to a supplier appear in the cash book but not in the bank statement.
So that means you have received something from your customer.
Hmm.
This is added over here. This is added, right? You have received something from your credit customer.
Yeah.
Yeah. Okay. That means it is included in your cash book.
Yeah.
Now what do you have to do? This is not there in the bank statement.
Bank statement.
So what will you do?
So you're talking about the 14,470, right?
Yeah.
So you'll add it to the bank statement.
Okay, let me record it. Come on, tell me. So your balance as per updated cash book is how much? Ira? Ira, your balance as per updated cash book is how much? So balance as per updated cash book is 7960. Now you have your balance as per cash book, updated cash book. You want to come at the balance as per bank statement. You want this balance as per bank statement. Now what do? You have received a check from credit customer. That means cash book is more and your bank statement is less. You want to go from the cash book to the bank statement. So you will deduct this. So 14,470 you will deduct. 1740 you will add. Because you've paid to the supplier, cash book is less, bank statement is more. You want to go from year to year, so you will add. So you get the balance as per bank statement, which is an overdraft balance of 4770. So you get balance overdraft of 4770 after adding. So in the bank statement, if you have the money, it has a credit balance. And if it is an overdrawn balance, it has a debit balance. So the balance on the bank statement is 4770 debit. I hope you're with me.
Yeah.
The 11th
Okay.
one.
The credit customer gave cash to a sales ledger clerk in part settlement of a debt. The clerk was dishonest and kept the cash for himself. He entered the receipt in the customer's sales ledger account but made no entry in the cash book.
Hmm,
What caused the theft to be discovered?
okay, that means
So,
he put it in the cash book, this was not recorded.
hmm,
But in your customer's account on the credit side, this was recorded.
hmm,
Cash debit, customer credit. So it was
hmm,
recorded in the customer's account,
yeah,
but it was not recorded in the cash book. So
hmm.
what caused this error to be discovered? Tell me.
It
Bank
won't be,
reconciliation statement is prepared when?
no, this is not for that. That's for when
When is
the
it prepared?
balance is off. Yeah, it won't be this.
When is it prepared?
Oh, because of if the cash book balance and the bank statement balance don't tally.
Cash book bank balance? Uh,
Cash book and bank balances are not tallying.
okay, fine. So this was entered in the sales ledger, in sales
Hmm.
ledger customer account. So
Hmm.
when can this error be discovered? When your balance as per the sales ledger does not match the general ledger.
Yeah,
In general ledger, you make SLCA.
yeah.
So when your credit balance of this, sorry, when your balance of the customer account does not match the balance of your SLCA,
Also,
this
you make
error
the
will be
same ledger.
discovered. Yeah?
Yeah,
So
yeah.
the correct answer is B.
Hmm.
Come on, you want credit sales. To find credit sales, which account do you make?
SLCA.
Tell me.
So
Balance
on
at
the
side,
48,000
which side?
debit side,
And 65, 300.
it will be on the credit side last date.
Trade discount, will it come?
No cash discount will come.
Cash discount will come. Very well. Bad debts,
Yeah, it'll come on the credit side.
increase in allowance. PDD does
Bad.
not give away.
non-current.
Cash received from the customer comes over here.
Yeah.
So what is your total of your credit side?
Mm.
This would be credit sales, right?
Mm. The total is 592,000.
And from that, when you minus 48,000,
544,000.
answer is
B.
13th month.
At a business's financial year's end, there were expenses owing, expenses prepaid, income owing, and income received in advance. How will the ledger account balances brought down at the start of the new financial year appear in the general ledger?
Okay, fine. So in the general ledger, they want you to tell how will it appear. Okay. Now tell me other receivables are what?
Other receivables are prepaid incomes,
And
um, prepaid income and
other receivable is prepaid income. Current
yeah, when you
assets, other receivables. Prepaid
huh,
expenses
and yeah,
and outstanding income.
outstanding incomes, yeah.
And in current liability, what you have? Other payables.
Yeah, so prepaid income and outstanding expense.
Prepaid income cannot be paid. Pre-received income
Received income, yeah.
and outstanding expenses.
Hmm.
So how will the balance be brought down? Brought down means same side, right?
Hmm.
Prepaid expenses and outstanding income. They are current assets. They have which balance?
Debit balance.
Pre-received income and outstanding expenses. They are liabilities.
Yeah, so they have credit balance. Current assets have debit balance.
So come on. Prepaid expenses. Prepaid expenses. Prepaid expenses. Outstanding income is income owing.
Hmm.
Income received in advance is pre-received income.
Hmm.
And
So yeah,
expense owing is outstanding expenses.
yes, we see.
So the option is C.
Hmm.
I hope you are with me.
Yeah.
Go to the 14th one. Did you try this?
A business
Did you
pre
try this?
no, I haven't.
Okay, fine. The size is so dreadful. Come on. Tell me.
A business prepared its statement of profit or loss for the year ended 31st December. During that year, on 30th April, a non-current asset had been sold. The following information is available in respect of this item.
Okay. So your year ends 31st December. On 30th April, you sold a non-current asset.
Hmm.
So cost of the non-current asset is there, sales proceed is there, residual value is there, carrying value is there, 8 years depreciation is there.
Hmm.
Okay, read ahead.
Non-current assets are depreciated using the straight line method, with depreciation being charged for each month of ownership. No accounting entries had been made in respect of this non-current asset for the year ended 31st December. What was the effect of this omission on the profit for the year?
Okay, on the profit for the year. So this non-current asset effect on the profit, one thing would be depreciation should be there.
Hmm.
Depreciation of the current year.
Hmm.
Okay, up till the date of use.
Yeah,
Other thing that should be there is profit or loss on sale of asset.
yeah,
Is anything else that should be there related to this non-current asset in your income statement?
no.
Are you sure?
Yeah, the depreciation you took now.
The depreciation of this non-current asset that you have sold up till the date of use,
Hmm.
and the profit or loss on sale of asset.
Yeah.
Okay? Are you
Yeah.
with me?
Hmm.
Now let's see for depreciation of the current year. Cost of the asset is 130,000
Hmm.
minus residual value is 10,000.
Yeah.
Estimated useful life is 8. So depreciation for the full year would be how much?
It is 15,000.
15,000 per annum.
Hmm.
You have used this asset from which date to which date in the current year? Jan, Feb, March, and April.
Hmm.
So divide by 12 into 4.
It's 5,000.
5,000 is the depreciation for the current year that should
Hmm.
come in the income statement. Okay. So 5,000 expense should be there. 5,000
Hmm.
expense is understated. Are you with me?
Yeah.
Okay. Now let's talk about the profit or loss. How do you get the profit or loss?
You'll do the net
Carrying
book
value is how
value.
much?
Carrying value is 52,000.
This is on 1st of January.
Hmm.
You have used the asset up till carrying value is mean net book value. So
Hmm.
depreciation up to 30th of April should be charged.
Yeah.
This is how much?
5,000.
So carrying value
Minus
for date
5,000.
of sales is how much?
47,500.
It is 47,500. Carrying value up till the date of sales.
Hmm.
You sold it for how much?
Hmm. 53,500.
So you have sold it for 53,500. That means you have profit on sales.
Yeah, of 6,000.
Profit on sales is 6,000. So 6,000 income is understated.
Hmm. And
5,000
5,000.
expense should wipe off 5,000 income.
Yeah.
So 1,000
Of profit.
income is understated.
Yeah.
If 1,000 income is understated, that means profit is
Understated.
understated by 1,000. So the correct answer is option A. Think over it and let me know. On the 15th one. Read please.
The owner of a trading business
I read what
prepared
is the requirement of the question? What do they want us to find?
which transaction will affect both the gross profit for the year and the total value of the net assets on the statement of financial position.
What is net assets?
Total assets.
Net assets is your capital.
Hmm.
Okay.
Hmm.
So which statement will affect your gross profit as well as your capital? Come on, read ahead.
Okay.
Sorry.
So I start from the beginning then. The owner of a trading business prepared a draft financial statement for the year ended 31st December. It was then discovered that the following transactions occurring during the year had not been recorded. First one is a check for $500 had been received for commission earned.
Wait a minute.
Cash amounting
Stop,
to
stop, stop. Let
2009.
us analyze. Let us analyze.
Okay.
Okay, fine. So you have discovered that these transactions had not been recorded. Check for 500 had been received for commission earned. Come on. Will this affect the gross profit?
Mm, yeah. No,
See,
gross profit this will not affect.
this affects the other income. Now we want to
Yeah.
know what affects both. What
Hmm.
affects both the gross profit and the capital. Now, since this
Hmm.
is not affecting gross profit, I don't care about it, right?
Yeah.
Come on, go ahead.
Then cash amounting to $2,900 was received for a sale of good which had cost $3,000.
That means you forgot to record sales.
Hmm.
Will this affect gross profit?
Yeah.
So this will affect gross profit. If this will affect gross profit, this will affect your profit for the year and it will affect your net assets also.
Hmm.
Correct? So
Yeah.
now do smart work. One and one,
So
this option goes.
yeah, gone. And it won't be the last option also.
Yeah, it won't be the last option also. So this has to be this option. Now let's
Hmm.
check. Third one. Read, darling.
Yeah. Inventory costing $5,000 had been taken from the business by the owner for personal use.
You did not record drawings.
Yeah. So it will
And
affect
cost
the
of
gross profit.
services you did not reduce. So it
Hmm.
will affect your gross profit. It will affect your net assets. So that's option C.
Hmm.
Go ahead. Go to 16th one.
Yeah. A business sells some inventory for $80 on credit. This originally cost $50. How does this affect the statement of financial position?
So current assets will reduce.
Yeah,
By how much?
by 30,
Inventory is valued at what?
cost or NRV, whichever is lower.
So cost or NRV, whichever is lower. What was your inventory valued at?
$80.
It is your selling price, right?
Hmm. So
And
it, oh
current
yeah, it
assets is
originally
the
cost 50.
value.
Hmm.
Okay. So current asset, that means your stock will go down by how much? 50.
$50.
Your cash will increase by how much?
Cash will increase by
Trade
30.
receivables will increase by how much?
Hmm.
Selling
Will
on
it
credit.
increase? Yeah, so it'll increase by 80.
80. Because you sell it to at the selling price, right? So your
Hmm.
net current assets will increase by how much?
By 30.
30. So this could be the C or D.
Hmm.
Profit is how much?
30 only.
So profit increases owner's capital.
Yeah,
So owner's capital will increase by
30.
option
Hmm.
D. Are you with me?
Yeah.
Go to the next one.
Yeah. Which entries are made to record interest on capital in partnership accounts?
Okay, interest on capital. Interest on capital. If we have capital and current account, which account will it be credited to?
Current account.
Current account. And it is an expense towards partners.
Yeah, appropriation account.
Debit. 17B. With me?
Yeah.
Go to the next one.
Hmm.
What do they
So
want?
now L and M are in a part. They want residual profit.
How much residual profit will L
L
receive?
is. Hmm.
Fine. Come on, read now.
Okay. L and M are in a partnership sharing profits and losses in the ratio of 3:2 respectively. respectively, sorry. So for the year ended 31st March, their statement of profit or loss showed a profit for the year of $68,000. The following information relates to the partnership for the same period. Okay.
Interest on loan might have already been adjusted, right?
Then, yeah, in the
Yeah,
income statement.
because it is
Yeah,
other expenses.
yeah.
So they want to know only how much residual profit he will receive.
Hmm,
That they don't want L's share of profit. They
hmm.
want how much of residual profit he will receive. So to get the residual profit, you will add
Yeah.
interest on drawings, interest on capital. What will you do?
Interest on capital, you'll add.
Oh
No,
my.
interest on capital, you'll minus. Interest on drawings, you'll minus.
Huh?
Interest on capital, you'll minus, and interest on drawings, you'll add.
And salaries?
Minus.
So what is the residual profit that you have?
Second. You have 46,600.
What will be L's share?
Inside.
Are you sure it's
Else.
46,600?
Yeah. Wait, let me do again.
Yeah. What is L's
Hmm.
share?
We'll do into 3 upon 5. Yeah, it's 27,960.
Okay. There's one thing that kids will get confused is this, okay? Always
Hmm.
remember interest on loan is adjusted and they
Hmm.
want L's share of residual profit.
Yeah.
Come on, read it. 19.
Which reserves are revenue reserves?
Come on, tell me.
General reserve,
Which reserve it is?
revenue reserve, and even retained earnings is revenue reserve.
And these two?
So it can't be B, it can't be
You don't
C,
know
it
this,
can't.
Arnott.
Hmm?
These two is what?
Capital reserve.
You know the answer, na? Why you doing can't be, can't be?
अरे तो for sure then we know.
Ah, okay. Come on, now what do they want from you?
Now they want the balances on the reserve account after the bonus issue has been made.
Okay, fine. Ordinary shares have value how much?
Hmm. 0.40.
So what is the number of shares you have?
200,000 divided by 0.40. 500,000.
500,000.
Hmm.
Okay. Come on. What is the bonus issue?
Made on the basis of 3 shares for every 8 shares held. The issue is made so that the reserves are kept in their most flexible form. So 500,000 into 3 upon 8, which is 187,500.
100,
Hmm.
187,500 shares into how
Into
much?
0.40.
So this will become how much?
75,000.
75,000. Okay. 75,000 is your bonus and reserves are in most flexible form.
Hmm.
So you will minus 75,000 over here.
Hmm.
That is it, right? And you will add
Yeah.
75,000 over here.
Yeah. So bonus is removed from share premium first.
Are you sure it's only 75,000?
Yeah.
500 shares are held and you give 3 shares for every 8 held. 187,500 into 0.40. So 75,000.
Hmm.
75,000. So retained earnings will remain the same, 82,500.
Yeah.
And share premium would become 5,000.
Hmm.
So option,
C.
are you sure?
Yeah.
Go ahead. Come on. I want possible reasons for change. Year one inventory turnover ratio is 90 days.
Hmm.
And year two inventory turnover ratio is 120 days. What does the inventory turnover ratio tell you?
That in how many days you like how many times the inventory leaves the go down.
So in how much time you convert stock into sales?
Hmm.
So here it is taking you more time. Yeah?
Hmm. Yeah.
They want possible reasons for change.
Hmm.
If purchase has decreased, will the inventory turnover ratio increase?
Mm,
If you're purchasing
no,
less,
no, it won't.
that means stock is less.
Yeah.
That means turnover should be more.
Yeah.
Second could be the reason.
Hmm.
Third,
Sales have decreased, which means turnover will be more.
sales have decreased. So number of
Yeah.
turnover will be more. So
Yeah. So
two
even
and three
second.
looks good, right?
Hmm.
So see where you have two and three both.
C.
See. Trade receivable turnover ratio. How do you calculate?
Credit purchases upon
Trade
trade
receivable.
tradable upon credit purchases into 365.
Huh?
Trade receivables upon credit sales into 365.
Why are you saying credit purchases?
गलती से
Trade receivables is how much?
16,000
Credit sales,
to 20,000. It is 27 days.
how much?
27 days. B.
22. Okay. Go ahead. Giving you 5 minutes time, okay? First
Hmm.
do this and then I will come back.
Okay.
Read the 23rd one.
A business commenced trading on 1st January. The purchases and sales of inventory for January were as follows.
What do
The
they want
business,
from you?
they want the gross profit.
Okay, they want the gross profit for January. Okay,
Hmm.
fine.
So
So you purchase what?
you purchased 6 and you sold 4. So
One.
closing will be
You're
2.
calculating as per FIFO, right?
Yeah.
So closing inventory is how much?
2.
2 units. At
Hmm.
what rate?
250.
250. So it will become how much? But you
500.
want gross profit now. So why you want closing inventory?
You'll want now sales minus cost of sales.
So sales is how many units? 4 units, right?
Yeah,
800.
1,600.
800.
1,600.
Huh?
How?
1600, yeah.
Yeah,
And purchases would be how much? For 4 units.
purchases.
So it would be 3 into 200.
It'll be 1,350 total purchases.
1 into 5,
Miss, I didn't do it like this.
850. I want to find gross profit, right?
Yeah, so I did in the normal
Gross
like
profit is
sales.
the sales minus the cost of the goods that you've sold.
Yeah,
The
so
sales is 4 units
purchases
into
minus
200
closing.
is 1600. Why I want to
Hmm.
calculate closing. I will directly calculate the cost of goods sold. You've
Okay.
sold 4 units, right? So I need the cost of 4 units.
अच्छा, okay.
1600 minus 850.
Hmm.
750.
Yeah.
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 Go to the next one. What do they want?
Mm,
What do
wait
they
one
want
second.
from
A
you?
company has been asked to quote a
What do
price.
they want from you?
They want the quotation for the job.
What is the prime cost?
2000 plus 3300 plus 1650.
Okay, overheads is 50% of labor cost. So what is overheads?
3300. So it'll be 1650.
1650. So what is total cost?
6950.
Profit?
Into 20% first will do 1390 plus 6950. So it is 8340.
Option?
B.
Go to the next one.
A manufacturing business has a service department X and production department Y and Z. Department Z is labor intensive. How is the overhead absorption rate set for department Z?
Okay, department Z is labor intensive. Service department. So first, what do? We have X, Y, and Z, right?
Yeah.
So first, what we will do? We will apportion cost between all the three.
Hmm.
Yeah. So we will
Yeah.
apportion cost between X, Y, and Z. This two has gone.
Hmm.
Then we will reapportion X to Y and Z. X is a service department, right?
Yeah.
So then the service department cost is reapportioned to the production department. So
Hmm.
reapportion X overheads to Y and Z. Both these options are
Yeah.
correct till now.
Yeah.
So how is the OAR set for department Z? So how do you find OAR?
Why you'll do budgeted wala
Budgeted overheads divided
by budgeted activity level.
so which option?
A.
Option A. Yeah,
Hmm.
26. Why is overheads under absorbed?
Hmm. It won't be the first one.
Under absorbed is when your actual overheads are more
Hmm.
and budgeted overheads are less.
Less. Yeah.
That means you have under absorbed.
So it'll be C. Overhead incurred is greater than overhead absorbed.
Okay, fine. Go to the next one.
A business produces two types of products, P and Q, for the month of January. Overheads are absorbed using direct labor hours.
What do they
The
want from
production
you?
details, they want you to calculate overhead absorption rate per hour.
Okay, how do you calculate the overhead absorption rate?
You'll do budgeted overheads upon budgeted activity level.
You'll do budgeted overheads divided by budgeted activity level.
Yeah.
What is the budgeted overheads?
Budgeted overheads, is it 6500?
Yeah,
Okay.
budgeted activity level.
Budgeted activity level is, you have to calculate it. Huh?
So this is for unit P. How many
Hmm.
hours?
Unit P is 1.5 hours
So
per
total
unit.
hours is 7,500.
Hmm.
And for unit Q, it is 2,000 hours.
Yeah.
So total budgeted activity level is how much?
6,500 divided by 9,500 hours. So it's 0.68.
Okay,
Hmm.
go to the next one.
Which statements about marginal costing are correct? Contribution is the difference between sales revenue and total production costs. Costs are classified as variable
For 1
costs or
minute,
fixed.
analyze that, please.
Yeah. So first one is not correct.
Mhm.
Second one is costs are classified as variable or fixed cost only. Second one is correct. Then
Because
variable
only
costs
variable.
include variable selling expenses. Yeah.
Correct.
So it'll be third one also. So 2 and 3 only.
Yeah, so option D.
Hmm.
Next one.
Next one is the following
Marginal
information.
cost per unit of
Hmm.
the finished goods. What do they want from you?
They want
Marginal cost per unit.
huh.
What is marginal cost? It's a
Mm,
variable cost.
yeah.
Variable cost is what?
Variable cost will be direct material costs,
Hmm.
direct labor costs, and bus used only.
Okay, fine. So what is the total number of production for you? What is it? This is 12,000 plus 6,000.
Hmm.
What is the total production for you?
2,400.
Okay.
So 18,000 divided by 2,400.
18,000 is a total variable cost, and
Hmm.
your units that you have produced is 2,400.
Hmm.
Okay. So it is 7.5. Why do I advise you to read what you want first?
So
So
that
that
when you are
when
reading.
reading the question, you know that what information you want.
Hmm.
Okay.
Hmm.
Come on, go to the next one.
Which statement reflects how cost volume profit analysis can help with management decision making?
Cost volume profit analysis helps you setting short-term prices.
Okay.
Okay.
Like break even.
Yeah, it is the break-even analysis only. So this
Okay.
helps the management with the decision making.
Like,
Okay.